Per usual, everything on this channel is for educational purposes only. It is not intended as financial advice. It's Sunday. I like to record these after the weekly close, which is 8 Eastern currently. It's going to change with daylight savings, but in any event, not too much happened last week. We did have some non-event excitement at Jackson Hole, Wyoming, basically Powell reiterating things he said 25 times over. But maybe more importantly is the markets waking up to the probability of an eventual additional 25-point rate hike. I'll look at the inflation and macro data tomorrow, but we're still not quite to that 2% target, which Powell reiterated was the target. And unemployment remains low. So they're going to keep going. So it's certainly one thing to keep in mind. Yes, they're essentially almost through here with their hiking regime, but they're going to turn the screws one more time before it's done by the looks of it. Also, you got to keep in mind we're in, based on seasonality, about to enter a not so great period for traditional markets, for crypto. The average September for Bitcoin is like negative 8%. The average September for the S&P is negative as well, I believe. And average returns for the year on the S&P, total return, this says adjusted for inflation, let's call it 8%. Current price return is 15%. So we're currently double the expected average already for the year. We're also still up significantly in Bitcoin land, in Ethereum land, and QQQ, the SPY, NASDAQ, really kind of beating ETH here a little bit. I would have to compare total return of ETH versus NASDAQ year to date. I bet it's still quite close, and that's not a good thing for crypto. If there are things less risky on the risk curve that give you the same return, you're certainly not going to jump into extra risk to get no upside, no additional return. So it certainly hurt ETH, hurt Bitcoin. But the point here is, look, we've done pretty well. People still say we're in a bear market. I mean, I guess on Bitcoin, we were up, what, 80, 90%? We're still at 57 on the year. Don't really think you can go up 57% in a bear market, 80% in a bear market, but maybe. Anyway, so keep that in mind. You've got the likelihood of additional rate hikes, which would lead to additional yield. And we've kind of done okay for the year, just on all fronts. So I think there's going to be a very high propensity for many, many people on average to take profits, rotate into cash, and just wait for clarity, wait for things to calm down, wait for the Fed to finish whatever it is they're doing, whether or not that'll take 6 months or longer, whether or not you get a recession. I just think there's significant headwinds based on what returns already are for the year, right? And we're still dealing with the extremely high likelihood of a DXY breakout. I mean, this thing absolutely stick saved on the lows. I thought for sure this was going lower based on TA, so maybe I'm wrong on this end too, but bullish Kumo breakout, bullish cloud, you got a bullish 5200 cross coming soon. It's right at the yearly pivot. And as I say and have been saying, this is really bad news for risk because we're just denominating against the dollar, right? So if we have a strong dollar, it's very hard for risk to do well. And this picture is very reminiscent of pre-2021, where we got, 500 basis points of rate hikes. Now, I don't think we're going to get another 500 basis points of rate hikes, but very similar inverted head and shoulders, Kumo breakout, right? The whole shebang. I think it's just very unlikely that this ends up being bearish and doesn't go anywhere or is even neutral. I think there's a very high likelihood that really max pain would be pivot to pivot, 114. That would be max pain for everything, including Bitcoin. That would easily send us, I think, to 20K. ETH to 1,000, potentially 3 digits, right? That's the sound of all the ETH maxis shutting off this channel. But hey, I mean, it's possible. I would love to see some more pressure on the stakers on ETH. The narrative that just sit here and stake and we'll get rich forever, bro, just perpetuates continuously. And I would just love to see that get pressured a little bit. But anyway, DXY looks incredibly strong. It's hard to ignore the comparison. Nearly an identical fractal. This is the 3-month yield. and the 10-year yield. Okay, so we are still inverted on the yield curve, yes, but the 3-month, I mean, again, if you're up 50-60% on the year, sit out the next quarter, come back Q4, full strength, ready to buy whatever dip there was, and party then. I don't think now is the time when yields continue to rise here. Just incredible multi-decade highs here of yields. It is very hard to ignore, and again, that's just going to hurt anything that isn't risk-free, right? One thing to watch maybe on the periphery would be weakness on the regional banks again, because even though we're only expecting maybe one more hike, even though they have BTFP now, watch for the cracks in the commercial real estate market. Watch for the expectation that regional banks will continue to do poorly with additional hikes. Watch for the expectation of deposits fleeing out of regional banks into money markets, into treasuries, that sort of thing. And this would definitely be a place to watch that happen. The regional banking ETF actually looks fine. It doesn't look turbo bearish, but it has turned down quite a bit from the highs so far. Now it has hit its multi-year head and shoulders pattern. You're going to hear me say head and shoulders a lot in this video. Something to watch this week, next week, into the next quarter to see if regional banks continue to get stressed. Now on the NASDAQ, on S&P, and on oil, we have a potential head and shoulders setup. And I might be crazy, but I've seen it on Twitter, maybe 6 other people as well, calling this out. It's horizontal, so the diagonal folks can't yell at me. The head and shoulders maxis always tell me it can't be a horizontal, can't be a diagonal, whatever. They're wrong. But in any event, yes, I would agree. There's a head and shoulders here. That is a reversal pattern. Not only that, as expected, with any traverse through the cloud, any true trend reversal, you typically do have a pattern on the other side of that precedes it. So this all makes sense. This all is setting up appropriately. You have a bearish TK cross, you have a bearish edge to edge here, potentially to 336, more within the range of the expected move on the head and shoulders, and the 200-day moving average is right there. Eventually, right? It'll catch up slowly, but it'll probably get there by the time price gets there. All of these patterns are invalidated with any higher high beyond the right shoulder. So for the Qs, it's 373, or a bullish TK cross, right? That would invalidate this based on trend. But if we are bearish in legacy, which I think we're setting up to be, I really think it's going to be extremely hard for us to go bullish in crypto land. So here again, the S&P, bearish TK cross, ready to go through the cloud, and the 200-day is right there as well. So maybe 4,200 for the S&P. I don't know about this week, but maybe over the course of the quarter. I don't know. It just doesn't look bullish in any regard. Now, anything above 4,500, 4,480, that would nullify this pattern. And I think the ultimate hero trade, the ultimate counter trend trade, where it's you versus the universe, would be like an NVIDIA short. Not financial advice, okay? But if you want something with potentially significant downside, it would be something like that, where you're basically calling your shot on this is a bubble, this thing's going to reverse, this thing's going to mean revert, regardless of AI, blah, 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 right? Anyway, something to consider and watch. Here's the oil version. The daily, the 12-hour, it's all there. No matter which time frame you really look at. There's a daily TKC clamp as well, but again, all of this stuff sort of looks extremely similar. Now, it doesn't necessarily make sense that all these are printing the same sort of fractal. I don't think it really matters at the end of the day. You've also got this broader Adam and Eve that may just sort of morph into some sort of ascending triangle on oil, but certainly doesn't look bullish in the moment. Anything above 82, and this is nullified, but if anything, you could call this a multi-shouldered head and shoulders. It just certainly doesn't look happy to be up here. So before we migrate to crypto, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with a link in the description of the video. And one reason I'm even partnering with them is because it's an exchange I actually use and have used for many, many years. So I definitely feel more than comfortable recommending them, considering I use them myself. And one thing I just always like to monitor on Kraken is their Tether USD market. We've been sort of tracking this for a couple weeks when, price went slightly below $1 on the market rate, and there were some issues in crypto land. Now we have stop the bleeding in crypto land, it looks like, and we're going to be dealing with potential rate hikes and legacy bleeding and banking headlines, which may be good for Bitcoin in the long term. But it just looks like everything's ready to roll over in legacy land. Now, we've already sort of rolled over in crypto land and held sideways here. So I don't have a bullish reversal expectation off the bat. It's sort of, you believe it when you see it type thing. You expect this to continue some sort of weakness, right? This could morph into an inverted head and shoulders. This could just lead into garden variety bearish continuation. This could be an Adam and Eve over time. All sorts of things. It's way, way too early to tell. And so, again, September is usually down month, so I don't even really care what September looks like at the end of the day. Certainly not looking for longs down here. We are below the daily cloud. The cloud is red. TK cross is bearish. So the cloud is screaming at you, please, trader. Please don't go margin long here. This is DCA territory. This is stack sats territory, at least for me. You do you. On the pitchfork with the early pivots, we are just below the early pivot, never a good thing. Got plenty of room to the downside on the pitchfork. But again, I'm not expecting a miracle here. It's pretty clear. Volume is muted. Engagement is muted. Flows are muted. Everything is just not in our favor. Regulations, rates, it goes on and on and on, right? Until we have an ETF. And I mean, until then, I wouldn't get super, super excited because nobody's looking to jump in by the looks of it anytime soon by any regard. Now, if we look at candlesticks, which I talked about last week in the teaching tech video, I'm sort of tracking this potential tweezer bottom on the weekly, which this is, I know, the 3-day, but you can sort of cheat it a little bit. What I'm basically saying here is if we can hold these lows, we're okay, right? And so far it looks good, but I wouldn't expect these lows to hold. There's also a hidden bullish divergence here that I talked about last week. That's still there. We have a similar bottom situation to the FTX collapse bottom. Now, what we don't have this time is volume. We really didn't have much volume. It was pretty much a OI harvest by the looks of it. On some exchanges, we did get lower lows, on the leveraged exchanges, but on the index, on TradingView, we did not. So on the weekly, I would need to see more evidence that this actually wants to go up, because right now, it, to me, does not want to go up. What you really want to see is a green candle above the previous week, so above the wick of last week's candle, which would be a cloud entry. And I'm just motioning an edge to edge. I'm trying to will it into being here. But again, at the end of the day, no rush, right? We got plenty of time till halving. Let this thing get angry. It typically does pre-halving anyway. We are kind of right where you'd expect us to be, even dating back to 2012. Leading up into halving, we typically have a dance inside of the cloud for an extended period of time on the weekly chart. So I'm really not worried in the slightest where we sit relative to where we have historically. But I do like 42 eventually. I don't think we're going to spend 250 days sideways in the cloud, but hey, I'll take it if it has a bullish bias. One other thing I mentioned last week that didn't really materialize yet would be expanding on the Bollinger Bands on the weekly. As you'll see, look on the inverse to that, the bullish version, right? Once we start breaking above the bands, then that's usually go time if we're bullish, right? So the opposite would be true for bearish. If we start to break below any lower lows, right? All the TA here is just saying, look, if we start making lower lows, again, don't expect a miracle, don't expect bullishness, expect continuation, and potentially expect multi-week continuation, right? So definitely prepare for that possibility. One other thing I talked about last week was this 5200 death cross that 100% of the time is picked up by news headlines, which is why I like to front run it a little bit to make it look like I'm smart, but really it doesn't really matter because it's just low hanging fruit, I think, for the TA news people to talk about, because everybody sort of knows what the 5200 is and what it means. So this should flip bearish in the next few days, which to me, that's good. I'd like to see this because just like the daily cloud, right? If we're back above the cloud, I know what to do. Here, I also know what to do, and it's not go long, right? That's not what the cloud is telling you. And again, pre-halving, we have had a messy relationship with 5200 crosses. So not expected, not an unexpected territory where we probably end up crisscrossing a few times here down the road into Q2 2024 when halving is sort of expected. And one other interesting data point that I never talk about, but I'm only going to bring up because of how interesting it looks currently. This is the CME futures positioning data called the commitment of traders data. Specifically, this graph is from the Crowded Market Report. Jason Shapiro He's a legend in this counter trend trading, like picking a turn, finding a turn, asymmetric, uncorrelated returns. Anyway, he puts these charts together, and he tweeted this one out this week. And there's 3 groups on here. Yellow would be small speculators, you and me. Blue would be hedge funds. Red, I believe, is miners, commercials. So historically, what he likes to see to go long would be commercials long, small, large speculators short, and or on a average basis. This is all time. This is back since 2018. By average, I mean you'd want to see maybe not extremes, but as an index, right? Small speculators, you and me, generally always super, super long. There have only been a few times historically where small spec has been net short. So currently small spec is currently net long, but TLDR is, this is the opposite picture of anything you'd expect for bullishness historically. He trades like 30 markets with this data. He has a YouTube channel, he has a Twitter. Anyway, check him out. He talks about this stuff all the time, but this is not, based on my interpretation, something that should result in bullishness. So just something, maybe a small data point to consider throughout this week and the next until we get another print here. But I think his read was large spec bought the dip. He didn't comment on commercials, but my guess is here, places like Riot, Marathon, they might be hedging significantly at this point for additional downside. So just something interesting to watch. And as far as like low time frame trends are concerned, if you look at alligator fractal stuff, you'll remember we're below the MAs, we're bearish. And if we get a breach of a support fractal in a bearish trend, that is a go short signal. So currently for Bitcoin, that is around 25.7. For ETH, it's significantly lower, around 15.70. But when I'm sort of not sure what may happen, but kind of sure that there's a trend in the making, I like to lean on this alligator fractal stuff. And a stop loss on that would be like 26.8 for Bitcoin and like 1700 for ETH. So we're leaning short, we're likely going lower. Just another way to measure potential entries. ETH has a little bit of room here on a pitchfork, but at the end of the day, if this gets invalidated, it is what it is. It's kind of more of an art than science anyway. But the low here is around 1200 on the pitchfork. We've clearly broken down below the multi-month ascending triangle, somewhat of a weak hidden bullish divergence here. Now, what may save ETH is a lack of volume, a lack of conviction at these lows. Now that can easily get annihilated with any lower low and volume picking up, right? But we haven't seen that yet. So I'm extremely optimistic as this thing is being printed, less optimistic as we're printing this, triple top, even less optimistic now that we're breaking below support. But ultimately the nail in the coffin, burying us 6 feet under is going to be volume on any lower low, because historically, this is Bitcoin 2016, very similar type of behavior. We set up this beautiful pattern and then we sort of puked below it on low volume and curled up slowly. Now, I don't think we're in the macro position to actually have a bullish recovery here, but I'm not going to rule it out. So watch for volume on ETH this week. And lower lows on ETH, if we just draw this as a channel and I just ignore the diagonal support, much like Bitcoin as well, people are looking at each low here as the next level down. So 1370,000. And I would just love to see, again, I don't want to see people lose money, but I want to see the market stressed to the point where everybody doesn't assume they're going to get a free ride. So I would love to see ETH sub 1,000. I'd love to see stakers panic, right? I don't know if I'm going to see that ever, but then I would be a little bit more convinced that we can go up, right? Much like the small spec, crowded market report data, right? I feel like the small spec ETH people are always max long all the time, right? And then some. So I would love to see that get stressed a little bit. And then on alts, it's pretty bloody generally. Lots of unlocks happening as well. So definitely watch for that if you're in some sort of active position. But this is the non-BTC, non-ETH market cap, and it does not look pretty. Now this could recover, this could continue to consolidate, but I just kind of assume that this is ready to make lower lows throughout Q3. So not a lot of good news, but it's a bit of a Rorschach test, because for me, I like that we've picked a decision. We were neutral before, now we're very bearish pretty much on every metric. So if we flip bullish again, to me, that's a long entry signal. That's a go signal. So that's a much more comfortable long than sort of guessing in the intermediary where we're going to be, right? That's all for this one. Like, dislike, comment, share, subscribe, and happy trading.